Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Thursday, July 7th. Stocks on Wall Street are looking to build on yesterday's modest gains as investors focus on the labor market. We've just learned that private employers added 157,000 new jobs last month, according to payroll processing firm ADP. Traders are also digesting the weekly reading of initial jobless claims. We'll tell you how the market is reacting to both of those reports after the opening bell. Of course, today's data is just a prelude to tomorrow's big government employment report. Economists are predicting that about 110,000 jobs were created in June, more than double May's dismal growth. The unemployment rate probably held steady at 9.1%.
The European economy is also back in the spotlight this morning. As expected, the European Central Bank raised its benchmark interest rate by another quarter percentage point to 1.5%. The ECB has signaled over the past couple months that its main concern is above target inflation. The decision tells us that a slowdown in Eurozone growth in the second quarter and ongoing uncertainty over the region's sovereign debt crisis were not enough to outweigh inflation pressures in the minds of policymakers. We'll get more insight into the decision from ECB President Jean-Claude Trichet. He's speaking at his monthly press conference right now, and we'll let you know what he says later this morning. Separately, the Bank of England kept its key lending rate unchanged, placing concerns about the country's ability to pull out of a slowdown in the face of austerity measures above fears about inflation.
Following those moves, both the euro and the British pound are weaker against the dollar, and that's helping to drive gold prices down a bit after they hit $1,530 an ounce yesterday. But despite the dollar's strength, oil prices are on the rise. Crude is now trading back above $97 a barrel. And according to analysts at two big banks, that upward trend is likely to continue. Goldman Sachs and Morgan Stanley reiterated their bullish views on both oil and copper, predicting that a global economic recovery in the second half of the year will push up prices. Overall, commodity prices fell nearly 8% in the second quarter, their worst performance since 2008, as a huge earthquake hit Japan, the U.S. expansion slowed, and China tightened its monetary policy. But Goldman and Morgan Stanley said they expect commodities to rebound by 20% over the next 12 months.
On the corporate front, the retail sector is likely to get the most attention from investors. All the big chains are reporting their June same-store sales, and so far the results are encouraging. Analysts say that extremely hot and dry weather in much of the country drove shoppers into the malls during the last couple weeks of the month. At the same time, 7 straight weeks of declines in gasoline prices and increased apparel discounting also enticed consumers. Among the early winners are Costco Wholesale, which posted a 14% jump in same-store sales, and Limited Brands up 12%. Sales at Macy's also topped estimates, sending that stock up 2.5% in the pre-market. Meanwhile, shares of Target are jumping more than 4% after the discount chain posted sales at the high end of its forecasts. And even Gap, which has struggled over the past few months, saw positive sales growth in June. That stock is rising more than 2% in the pre-market. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.